today we're going to do something different that we don't normally do. We're not going to try to show you a bunch of charts.
You just lost half of
I
our
just
viewers.
lost everybody.
No charts. That's what I come here for, the charts.
We're going to discuss strategy, what investors also need to know about, and what we're doing for 2022, because the market has clearly changed and it's saying certain things are winners and certain things are losers. You guys have to pay attention to this, like we're paying attention. So let's discuss what our strategy is going forward, because we do have one. Surprisingly.
Surprisingly, yeah. Before we go any further, guys, if you like this content, hit like and subscribe. It helps us out, helps push this video out. Thanks for your support. Yeah, the strategy has changed. We were saying before we started recording this that I think last year was the year of the SPACs, and it was a lot of hope. People were trying to invest themselves out of the COVID-19 situation, and it didn't happen. And we saw ridiculous evaluations, ridiculous price to sales. What happened in 2021, I think, was a correction of that. All of this stuff sort of came back down to earth, and people started running away from those speculative stocks that we were real hopeful for last year and back into value stocks, growth stocks, a lot of tech stocks. And I think it's foolish not to adjust your strategy with where the market is going, because I don't know about you, like we're sitting on the backs of these whales. We're not moving the markets at all. So
a lot of people who have these high growth, high price to sales companies in their portfolios think that they're probably going to do good in 2022. And my belief is that they're not going to do good in 2022. I think everybody's moving to safety. Even if it's growth, it's going to be companies like Tesla, which makes a lot of money. It's going to be companies like Google, which makes a lot of money. Companies like Facebook makes a lot of money. So I think all this money is transitioning itself, even though I think we've been hit hard.
It could still go a lot further from here.
It can go way lower.
I think,
yes.
Yeah. And I think people might feel, especially if your portfolio is heavily weighted in those stocks, you might feel like you've hit some sort of bottom because your portfolio has just been bleeding for months at this point. But there's a point where it could have a real downturn. I think a lot of people are actually starting to feel and see the effects of inflation. And so I think two things. People are being more cautious with what they do with their money, but they're also expecting more out of their portfolios, out of the performance, and demanding more. And so I don't know that people are risking anymore to get the 5X if they can get the guaranteed 2 or 3X now.
People still have this hope that their junk thing is going to like shoot off to the moon for some God knows what reason, honestly, because the market, all the indications is that it's not going there, at least not in the interim. So you can be sitting on this position for quite a while. I'm not saying it's never going there, okay? Certain stocks like Lemonade that I own, a small position, I know it's in the toilet, okay? I know it's probably going lower. It's at 44 bucks or something right now. And I'm still going to hold it, but I know that. A lot of people don't know that. They think it's going back to the 90s, $100s, $150 range. And I'm like,
There's
why?
A real impatience. There's a real impatience.
Why would it go there now? Like, there is no reason. If you look at some statistics on this, which once again, I have shares on this, like, okay, price to sales of 24. Like, if you're already going to pay massive amounts for a growth company that's losing money like crazy, why wouldn't you just buy Tesla? You go back to the statistics here, also kind of expensive, and you have a price to sales of 24. So if you, once again, if I'm asking which one would you rather buy that has actual growth and they're profitable, or would you rather buy Lemonade, which has a price to sales of 24 and doesn't make any money? It's like, it becomes obvious at some point. Like, you don't want to keep putting money into this guy unless you know you're going to just dollar cost averaging and you're going to wait a couple of years. That's fine too. But I think things are transitioning to where we're going to talk about some of these stocks. But if you look at the growth companies that are killing it and making a profit, I think all the money is moving to these guys. A lot of my speculative stocks, I've slowly been transitioning to these high growth but high earning companies and away from the more speculative stuff. And we can get into which ones, but I think these are the clear winners.
Well, it sounds to me like what you're saying is you're moving your money away from the more speculative stuff, the safer bets, the companies that are on a clear trajectory of growth and that maybe have been beaten down, but you're transitioning them away from some of the riskier stuff to some of the safer stuff. As you were talking, I was thinking, like, the markets are really psychological. I think all of us like to think that we base our investments on things like price to sales, forward PE, but we don't. We're emotional beings, all right? And so I think when you're in a bull market, the statistics really matter to you, right? You say, man, I don't care. Look at the price to sales. Look at their growth. Look at what they're. Look at all this data. Look at this stuff saying that they're going to keep growing. But as soon as it takes a downturn, it becomes personal to you. Look at what I'm losing. I don't think you care about price to sales or future growth because you're thinking about what it's costing you. So when you're looking ahead and things are great, you're looking at the company. But then you start thinking about your real money. It's sitting in the markets. What could I be doing with this money? And I think that's where you get so much more psychological pressure on the downturn.
It's easy to hold something when it's in a bull market, right? Because it's always going up. you really determine how much conviction you have when it's going down.
When it's down. In a bear market, if you find yourself just holding, you might have strong conviction in a particular asset, but you can take it or leave it. But if you find yourself wanting to buy more as it comes down and you keep seeing it as a discount, naturally, without having to look at charts, when you really feel like, oh man, this is a chance to buy more, that's when you know those are your strongest conviction plays. And what I noticed is like in some of these bear markets, when I see some of my winners dropping, whether I'm sitting on profits or I'm in the negative in some other positions, I'm looking at them as money that I could be funneling into. Like I think for both of us, Tesla is just becoming a larger and larger part of the portfolio.
The amount of times they're proving to us how strong they are as a company is kind of crazy. The fact that the demand is off the charts. I'm actually thinking at $1,000, this might be a good investment again, which is weird, right? It's weird to think that a company like this at $1,000 a share worth over $1 trillion in the last year, basically 2 years. It was $40 billion to $1 trillion. That's a 20x, right? That's a 20x we were a part of. Let's face it, the only bear market is for high growth. It's not actually for the S&P. S&P doesn't look like it's in a bear market.
I think people are starting to see it, the effects of inflation. I
Well,
talked to several people.
either way,
that
they're all
now,
running to the high profitable growth companies. That's where everybody's running to.
I know some people that want to come into the markets right now just because they're seeing higher prices at the pump, they're seeing higher prices at the supermarkets, and they're saying the money that I have in the bank is just not going to go as far. So I know people that are getting into the markets now for the first time just because they see it. I've got to put this money somewhere because it's losing its value. And
where do they put it? Into the S&P, into the indexes. That's where you put your money because you're like, I don't know about these other plays. I've never heard of Lemonade.
Right. Going to it for the first time, like some of these Robinhood folks are now, they think it's the end of the world. So they think their portfolio is going to zero. And it's like, no, just wait till the new year comes.
It depends what they bought. Okay, so everybody who's investing in Tattoo Chef, I'm sorry for you, but
that was a tough year for Tattoo Chef.
My point is that, all the tattoo chefs, all the very good foods, all the lemonades out there, not saying they're never going to come back. I'm not. I think eventually they will. But the reason they're all bleeding so hard is because the people who were in this bull run of those stocks don't really believe in those stocks. They were just participating in the euphoria of the moment, right?
Right.
So now what we're going to find out is, what is Lemonade actually worth? That's what we're going to find out. Because all the traders are exiting and running for the doors. In fact, they're starting to short it. All these stocks, they're heavily shorted. If you look at FUV, if you look at Lemonade, we can go to the short interest, but it's basically, they're all 30% shorted. That means one out of every three shares.
But then again, when you have a company that is openly talking about diluting shareholders, it's gonna go down. It's actually a smart play. They're telling you the stock price is gonna go down. So of course you short it. It's the same thing with Sundial or SNDL, same thing with them. As soon as you announce that you have to do something you have to manipulate the amount of available shares to manipulate the price, or to take, it's just a guaranteed bet that the stock's going to go down. But it's a test for the people that are still holding to see if they can weather that storm and or buy more.
Well, this is what I feel, that a lot of people who think they're long-term holders are actually not. And the thing is, it's not like I'm immune to everything. I didn't hold everything to the end. There are certain things I don't believe in. So example being like Romeo Power. I thought I was going to hold it to the very bloody end, and I held it till $4 and I lost 80% of my value. And I sold it. So it's not all wins. But the reason I sold it, some people would say, well, you flaked out, you paper-handed the whole thing and you got rid of it. I don't believe in the story anymore. I would rather take a quarter of my money that I have left and use it for Tesla or Enphase or Facebook or Square or PayPal, anything I know that will do better than that other company, which I don't believe in anymore. So there's certain stories I just don't want to invest in anymore. Yeah, and I was wrong. So that's the thing. And there's certain stories that I was right in, right? So Tesla and Enphase and all these others, which we went heavy into, we were correct. And we are still holding, we're accumulating those.
What Vitaly did is called tax loss harvesting. Let's just explain it first. Well, I'll read the definition, then we'll explain it. Tax loss harvesting is selling of securities at a loss to offset a capital gains tax liability. This strategy is typically employed to limit the recognition of short-term capital gains. Short-term capital gains are generally taxed at a higher federal income tax rate than long-term capital gains. However, this method may also offset long-term capital gains. You ended up taking a bunch of profit this year on different stocks, on different crypto, and there's a huge tax bill that's due. whatever whether they were at short term or long term. So now you owe a bunch of money, and we'll just use some random numbers. $100,000 that you sold, and now you owe the government, let's just say $30,000 in taxes. So you could go and sell some other securities or figure out how to get the money a different way to pay that tax bill. But if you had some losses, like say some of your Romeo Powers, some of your Tattooed Chef, some of your very good foods, and total, let's just say that you lost $35,000 on all of those. Let's say right now they're in your portfolio and you're down across them 35,000. Well, if you sold and you're going to basically take that loss, say $35,000 worth of losses, those losses will offset the gains that you owe on the taxes that year. So now, instead of having to come up with $30,000 to pay the taxes, essentially you're using the losses that you've already got on paper to pay them. It sucks to take a loss, but you're going to have to come up with the tax money anyway. It's kind of prepaid.
A lot of sells that I did, especially in crypto, even if I wanted back, right now you can sell and just buy it back, by the way. You don't even have to wait 30 days. That's going away next year. So that's important. But yes, I did make a lot of profits in other companies. Look, if I want Romeo Power back, this is what I figured. Let me take that loss that I had of 75% of my value. And in January, February, when I'm over that 30 days in the equities market, I could take a look at Romeo Power again. And let's say it moved against me and went to $5, $6. Is Romeo Power going to $100 tomorrow? It's not. Let's face it.
No.
Is Lemonade going up back to $180 where it was at? It's not. Let's face it. So it's important to know where you are in the cycle. And I know that I'll have another opportunity for some of these things if I want them again later. And I could reevaluate later.
Vitaly was talking when he said in crypto that you can sell it and then buy it back right away. So for example, in crypto right now, if I bought a Bitcoin at $65,000 and it went down to 40, I could sell it and immediately buy it back at $40,000. So I'm literally holding the same coin now for the same dollar value. The only difference is I've restarted the clock in terms of when my 1 year long-term capital gains. But what I've effectively done is I've baked in a $20,000 or $25,000 loss. So now if that coin runs back up to 65,000 and I sell it, I've basically already paid the tax on it. I've baked in a loss of the first 25,000 of that is free because I baked it in as a loss.
I just want to make that clear. This is only for losses. So if you have losses on something, Tesla's not down for us. So that's not going to work.
Right.
But
right.
If we bought Tesla at 1,200 and it fell to 1,000 and we sold at a loss, $200 difference, we'd have to wait 30 days to get that loss into our taxes, which is important. I know maybe some people listening are not thinking this way, but they should start if they're trying to pay the tax man less. But it's a give and take. Not everything we do will be 100% correct. Is that okay? I think that's okay. It's just you have to know that if you were wrong, maybe it's better to move on than it is to try to diamond hand every goddamn position.
You know, as we saw, even with like the Doge Millionaire, like they can only, you get some street cred for having balls to like hold it. There's a certain point where it's irresponsible and it's not even cute anymore.
His portfolio went from 2.8 million at the peak of the market for Dogecoin all the way down to under 500,000. Why would you want to do that? There is no reason for anyone to have suffered that much loss because he was investing in a meme coin. So I'm just saying, I also invested in some meme stocks, but I got rid of most of them. There's no point to keep those things. You have to keep high conviction plays.
The high conviction plays are the ones where you just continually accumulate. You don't
Always.
sell them. There's no real thought of when to sell them. You still think no matter what price it is, it's a great deal. And you continue to accumulate those. Then you have other stocks that you believe in short term that you think are going to do well over 5, 6, 7 months, 8 months, a year, 2, 3, 4 years. But at some point you do see yourself sort of cashing that in, most likely to go into the other place, into the value place. Right. That's a lot of how I see crypto in the stock market. A lot of the crypto profits will end up in the stock market at some point. To continue what you were saying, I mean, this guy used to be a millionaire. At some point, he was sitting on $2.5 million in Dogecoin when it was at 74 cents at the high. It's in my savings account. This 33-year-old is no longer a Dogecoin millionaire. So, like you said, he watched his portfolio go from about 2 million.
That's how high he was, at 2.8 million. And that wasn't enough for him from a $160,000 investment.
So this is what he was in July, 700. This is in July this year.
He's less than that
700,000. Yeah. So he's less than that now. What did he gain from diamond handing from $2 million down to $500,000? That is such a tremendous amount of money. I don't think you really even fathom how much money that actually was that you left on the table.
Let's end this on at least what we're actually doing. So this is what I am actually doing. Tesla, I have not been buying recently, but I am planning to actually buy more. I think Tesla's going to dip. I can't buy a fortune of Tesla at this point, but I'm just going to keep DCAing into Tesla. That's my point. Number two, the reason I'm not completely going full in Tesla is because, and lemonade is out. I'm not buying any lemonade, so forget that. Let me cross that out. Even though I haven't
done. This is portfolio management right before your eyes.
Enphase is now heading back down. It shot up, as everyone could see. It's heading back down at around $200. I am going very heavy into Enphase, and there's a good reason for it because I know so much about this company. I am so comfortable. Even at 215, I really should just be DCAing again. I am so comfortable putting any money into it, watching it totally tank, as we talked about. I don't care where this goes in the short term. I don't care if it goes back to $100. All it is giving me an opportunity to buy it. Like that's how my mind is set on just always buying Enphase. So I'm going heavy into Enphase under 200 again. I've gone heavy into Facebook. And this is part of my thesis that 2022 will be about growth stocks that actually have profits, that are growing and have a lot of money that they're making on their books, meaning net profits. Facebook, you might hate them. They make money. So I'm going heavy into that. I have a lot of call options. I have a lot of shares. Let's go to the next one, Square. And which was funny is like 2 years ago, I would probably never bought Square. I thought it was overvalued during the pandemic, but now
we shorted it, right? And we
but
famously shorted it.
This is important to see. Like we've changed our mind. It's okay to change your mind when you're investing, when it's your money.
It's okay to be wrong. It's okay to be wrong sometimes.
Yeah, as long as you fix your strategy going forward, big deal you were wrong. Fix it and go forward the right way. So if you sold out of PayPal at 50, maybe you should be looking at it right now when it's down like 30%. It is a profitable company. Look, maybe the price to sales, the PE is not looking absolutely fantastic, but these companies over the long term are proving themselves again and again that they're going to kill it. And they're making money currently. And PayPal, of course, we've talked about this a number of times. We'll include links to everything, right? Another company that I think is being hammered, it's down around 30, 40%, I think 40% at this point. It's a growth company. You might say you're overpaying for it now, but I think it's an easy double for me. So my strategy is all these stocks that I talked about that I'm going heavier into these, with Enphase being the clear winner where most of my dollars will go to.
I'm not going to bother talking about Tesla or Enphase because like you, I really believe that Tesla's going to be, I believe Tesla's going to be a $10 trillion company. Maybe by 2030 to 2031. I really think that once it takes off, we're going to see exponential rises in Tesla, the likes of which you only see in crypto. I really think so. I also believe in Enphase, so I'm not going to bother talking about either of those companies. You've already made the case. Another one that I'm really getting serious about is Spotify. This is Spotify's chart all time. I just don't think the market understands what Spotify really is. And I think this coming year, people will. I believe they're getting more into video, and the fact that their base is, they have a base, a consumer base of music. I'm very bullish on this company. I actually want to do a video on them, but I just believe that is just the way that this company just trades sideways for a little while and then rockets up to sort of a new plateau, then trades sideways for a while. I do think that we're going to see this coming soon. I do think we're going to be up around the $500 level so fast with this company. Doge, as much as we've talked about it, I do believe it's becoming more and more of a long shot bet. I believe this thing is beaten down. Look, this was the first ever meme coin and kind of invented the meme coin space. I think as that, it's always going to sort of be the grandfather of all meme coins. But the other thing is, I'm not sleeping on the Elon Musk play. And I think a lot of people are sleeping on that, and people can say that it's a stupid reason to hold the coin. But Elon Musk personally owns 3 cryptos, right? Doesn't he own just Bitcoin, just Ethereum, and Dogecoin? And I think he would own Dogecoin because he has a use case for it that maybe no one's thinking about. It sounds crazy, but I don't care. I want to be holding Doge. I'm also accumulating more of ADA, of Cardano. This is another one where its use case is being proven over time. And I believe it has a strong future. I believe that this one and maybe XRP, which we can't buy anymore, are the strongest ones in the crypto space. The other one, which is one of those buy the rumor, sell the news, is, you're not going to believe this, is NEO.
Oh, look at this guy. You're investing in NEO now?
NEO. Well, did you hear the news? I don't know if you've been following the news because this sort of gets political, but there's been
You're funny how you switch. We're going to have to pull up our bull bear case and
yeah, but that was I know exactly what I said. I said as a short-term bet for 3 to 6 months, I could see it, but long-term, I don't believe in the company. I don't. Right. I haven't invested in it. And the stock is sitting at the same price it was last year. So in that sense, I'll do a small victory lap that the stock didn't really move over the course of the year.
Okay.
But
the thing is, everybody's been sitting on their growth stocks and down off the all-time highs. So you can't point out one thing. But anyway, why would you invest in NEO? I'm not following that whole logic.
Apple chief signed a $275 billion deal with China. During the private negotiations that year, Cook signed a 5-year agreement with Chinese officials, placating the government and preserving the business relationship. Following the agreement was a $1 billion investment from Apple to Uber rival Didi Shuang in 2016. Okay. And then this came out. Some big investor bought Apple and NEO stocks at the same time. So why would they buy Apple and NEO? Apple could partner with Chinese automakers, NEO or XPeng, analyst said. Apple is poised to enter the electric vehicle market as Wedbush Securities analyst Dan Ives predicted that the iPhone maker will soon announce an electric vehicle strategic partnership, potentially with Tesla, Volkswagen, or other auto manufacturers in China, such as NEO and XPeng. Apple makes a deal with China to spend $275 billion helping them. They want to go green, right? Some of that is China needs to go green because it's a really polluted country. Okay. Then they buy shares in a company that's sort of a rival to Uber. And now there's talk that they could partner with, say, NEO or XPeng. The short term, like bumper sticker, or like the headline of this is that Apple is going after that reoccurring revenue in Uber, in the Uber ride share.
I think what you're trying to say with all of this is that Apple's probably partnering. This is really the main point. Apple's partnering with either NEO and XPeng, which totally can happen, by the way.
Looks more like a NEO over XPeng.
Because Cathie Wood, by the way, bought a bunch of XPeng shares too, for some reason, instead of NEO, just FYI. Okay. Why did she buy all those XPeng shares?
Why did she buy all those XPeng shares?
Maybe she knows something, or maybe she understands they're farther along in their autonomy. I don't know what it is. But we know Apple's heading for autonomy.
NEO Day 2021 is December 18th.
Imagine they come out with an Apple partnership.
Just throwing it out there. This is one of those, seriously, buy the rumor, sell the news. Because if anything, NEO might get a bit of a pump this week off of its NEO Day. And then it might go down. But it's worth a couple of bucks to throw in there. And if it's a solid position, then I'll be happy that I got it, right? Sandy Monroe, a bunch of others will agree that at a certain point, the real competition for Tesla in the United States is not GM and Ford. It's the Chinese coming in, bringing great cars. There's going to be NEOs driving around in America. There could be XPengs driving over in America. And that could be Apple helping to bring them here. If Apple helps bring them here.
This is becoming more obvious that companies like NEO and XPeng might be the GMs and Fords of the next 10, 20 years, which is sad,
or at least
true.
they could become the Hyundais, the Toyotas, the Hondas, and take over that market.
Well, I want to point out to the audience that we have two different strategies. I'm going actually way more safe growth, the ones that are already making money. Basically, Facebook is not going to lose. Okay, let's face it. No matter how much we all hate it, it's not going to lose. You, it seems, have gone full risk on. That's what it seems. No, you're like, I'm going to be buying Dogecoin, Cardano. You're literally going balls out risk.
But in terms, if you just look at the number of positions, yes, but the allocations, you got to look at the allocations.
Right.
So much of my portfolio is becoming Tesla and Enphase that even if I divide it up among 10 other companies, it's such a small allocation that it's fine. And on the crypto side, so much of my allocation is Bitcoin and Ethereum. Like I cannot buy Ethereum at $4,000.
So we're both sort of agreeing that 80% basically is in like the big tech, like Tesla, like Enphase, or
the giants,
whatever, Square, PayPal, Facebook, whatever, all those giants. That's where most of our money is. So let's be clear.
Yeah.
And then we are speculating on a couple of other little guys to see what happens possibly. But I just want to make it clear, 2022 is still about the big tech that is winning.
I don't know what the effect of like things like inflation are going to be. I mean, people are starting to feel it. So I don't know how these companies are going to react to that. At some point, it's got to show up.
The lemonades of the world are going to suffer. The very good foods of the world are going to suffer way harder. I might get a 10, 20% hit, maybe 30% if it's really bad. But dude, those other companies are going to get crushed. It's going to be like another 50% down, 60% down. It's going to be like an altcoin dropping.
2021 was trying to figure out who these winners are, like really figure out who these winners are. And I would say, if you're not holding Bitcoin, Ethereum, and Tesla.
And Enphase.
I could even include Enphase. If you're not holding those four, then I just don't see where you're putting that money to get the gains that these, say, four assets are going to show us the next few years. Thank you, guys. It's been an insane year. We didn't think we would be at this point so quickly. I mean, we kind of felt like it would happen, but to actually see it happening, to get the subscribers up, have the interaction with you guys, it's been absolutely great. We hope you did well. Comment below what was your highest flyer of the year and what's the worst investment that you made. And if there's any stock or anything that you guys want us to cover, let us know.
Like and subscribe, hit the bell. Thank you very much.
Ding, ding, ding.